Welcome back to the Dividend Diplomats YouTube channel. You know us too. You've got Bert the Herd over there in the red, and you know you're rolling with Lanny here in the blue. And we can't wait to talk to you about another dividend stock watch list, stocks to buy here in the month of July 2021.
You know the drill though. Smash that subscribe button. Give us that thumbs up after. Lanny's pumped up. He found 3 undervalued dividend stocks to keep your eye on in May. Lanny, I can't wait to talk to you about them. You hear them. But first, I got to ask, we got red and blue here, Lanny. What Pokemon game color did you have when you were younger?
I had
Did you have the
blue.
red? There it is. I had red. This works out perfectly.
I had blue, man. I was a big Squirtle Blastoise fan.
Yeah, always a fan of the Charizard tier. No complaints from our end.
Bert may have pulled a Charizard a few weeks ago.
As well as did you 2 months ago or so. However many months ago it was, I can't remember. But you didn't come here to listen to us talk about Pokemon. Although, if you want to, let us know. We'd be happy to do that as well on a separate video. You want to hear about these 3 stocks that have caught Lanny's eye. Lanny, you want to tell us a little bit about your thought process, your methodology going into it?
Now that the month of June is over, and as everybody knows, the S&P 500 continues to, sit pretty heavy, well over 4,200 in the overall S&P 500 market. They actually clipped today. We're recording this on June 30th. They actually hit just before the day was over. They hit 4,300 just for like a hot second. So 4,300 was hit today, setting a new record. They finished at just a hair under that for the quarter end of June 30th. So dividend stocks are still hard to find. I don't care if there was a couple days in red, a week or two ago. That does not even matter right now. And those days in red weren't even that severe.
Doesn't it seem like that was months ago where those prices dropped? It just seems so far in our distant memory because the market just turned around and climbed right back up.
The market obviously still turning around, which is just again very unusual. With the Fed announcing tapering of their stimulus, as well as potential 2 rate hikes by the end of 2023. In addition, I don't know if that 4th true stimulus will happen, but we do have more money coming to everybody's mailboxes that have children. Starting July 5th, people may start seeing $300 extra per month per child. Go ahead, Bert.
Oh, that's a great point too, Lanny. And we may have an infrastructure bill coming in here too, which will see even more dollars pumped into the economy. So with all those things combined, it has been one heck of a month in the stock market. That's for damn sure.
Yeah, exactly. And I mean, in this game, guys, we don't sugarcoat it. You need to continue to stay invested in the stock market. And putting together the July 2021 dividend stocks to buy, that is the name of the game. In fact, I even bought stock today as we're recording this video. I may or may not have been on the stock watch list here, but to find these undervalued dividend stocks, Bert, what are the 3 metrics in the screener that we use?
You know them, everybody. Come on, repeat them with me. Price to earnings ratio less than the S&P 500, payout ratio less than 60%, and a nice big old history of increasing dividends where we look at the dividend growth rate and how long a company has been increasing the dividend. And of course, we also look at the bonus yield, the dividend yield as a bonus metric. Here, we always throw that in addition to the 3 metrics of our stock screener.
And, if you haven't caught on, I always put at least 3 dividend stocks to buy on each watch list that I put out monthly. You can also check out the more detailed analysis at the blog article that we'll link below in the description. Really, these are 3 stocks that all share very similar metrics, from the price to earnings ratio, the payout ratio, and you can even argue that the dividend yield is all very tight as well.
Yeah, no, you aren't kidding, man. They are all very comparable companies.
Yeah, so to really start talking about the 3 stocks to buy right now in July, we'll hit it hard with the COVID-19 vaccine, Pfizer, ticker symbol PFE. They're back on the stock watch list, and it shouldn't really be, no surprise to you. In fact, year to date, Pfizer actually hasn't even grown that much. I believe under 10% from a stock price appreciation standpoint. Somebody could check me on that though. Currently trading at just a hair over $39 per share. With the, talking about the first metric of the price to earnings ratio, analysts were projecting $3.76 per share. That equates to a PE ratio below 11 at roughly 10.4.
It's well below the market. And I mean, we've been talking about Pfizer for months now. This company is still under $40, which is incredible. The metrics haven't changed that much, as you'll see here with Laney. They continue to jump up and keep popping up on our watch list because they are so undervalued in the rest of them. Moving into that second metric here, their annual dividend is $1.56. Divide that by the forward EPS of 376, and they have that perfect payout ratio of just over 41%. And as a reminder to everybody, a perfect payout ratio we think is between 40 and 60%, because that strikes the perfect balance here of paying shareholders a nice dividend, but also reinvesting some of those earnings back into the company. So it's great to see them in that 40 to 60 range.
Yeah, nobody wants to own a dividend stock that's keeps you up at night versus helps you sleep at night. And that's kind of where Pfizer, fits the bill at just over 41% from a payout ratio standpoint. Now, coming out of the financial crisis, Pfizer has increased that dividend year after year, and they're going on pretty much 12 years of increases. And to talk about their dividend growth, they spun off their Upjohn business with Mylan to create Viatris, ticker symbol VTRS. And the talks were that the dividend was supposed to decrease after that spinoff. But I think because of the coronavirus vaccine and how much of a bang it's done for their financial performance, not to mention booster shot potential in the future, as well as delivering shots globally, that has far exceeded any expectation that Pfizer had. And in fact, management and the board maintained the dividend instead of reducing it post the spinoff. So you're getting 39 cents, per share per quarter. For, again, not even considering that in the growth rate calculation, they have a dividend growth rate of just around 6% over the 5-year average.
I'm just laughing because that backdoor dividend increase is fantastic. And you're right, it doesn't show up anywhere in the metrics, but you have to know you were facing a dividend reduction for Pfizer, and management just said, get out of here. We're going to keep that here. So that is a nice secret dividend increase from there. That last metric for them, the dividend yield, at their current price where they finished today, they are at 3.98%, so just under 4%, more than double the market. We know the story with Pfizer, everyone.
You've got to love that. The combination of a 6% plus growth rate with a 4% yield, that's like the 10% combination factor that I love. So again, that's Pfizer. Real quick summary, why they're on the list. Price to earnings ratio well below 11 times earnings, which crushes what S&P 500 is currently doing at over 20 times forward earnings. Payout ratio below 42%, dividend growth at or above 6% with a solid yield at 4%.
Fantastic. Moving into company number 2 here, another staple on our channel a lot recently has been on many watch lists over the months is Verizon, ticker symbol VZ. The leader in mobile communications, the 5G player, continues to show strong signs of undervaluation. The most shocking thing here about Verizon is when we ran them through the air quote new AT&T, it became apparent that if AT&T adjusts earnings in a certain way, Verizon may be the clear leader from a metric standpoint in that sector. So it's exciting to see them back on your dividend stock watch list once again, Lanny.
The Warren Buffett buying stock of Verizon Communications is back on the list. And again, they are very similar to Pfizer. That share price just really hasn't moved year to date. And truly has hovered around between 55 to 57 on the stock price range. So currently they trade at $56.03. Analysts are projecting $5.09. So for that first dividend metric of price to earnings, that equates to a price to earnings ratio of only 11 times earnings.
You're right in line there with Pfizer. Let's see where the payout ratio falls. Their annual dividend is $2.51. Divide that by the forward earnings, another perfect payout ratio of 49.31%. That one is almost smack dab in the middle there. You're not going to get any better than that. Do you want to tell us about the dividend growth history, Lanny?
Going on 16 years, and who knows, Verizon may be trying to replace AT&T, and for all those AT&T stockholders out there, Hey, we own AT&T stock. I know Bert owns it. I own it. So, we still own it. I've never sold. I'm still going to hold as of right now for AT&T in case those are wondering what we're doing with our AT&T stock. But Verizon stock dividend growth history stands at around 16 plus years at a similar growth rate that AT&T stock also showed, which, is around 2%.
Exactly. Moving into the bonus metric, that dividend yield here, their yield at their current price with that dividend is 4.48%. So man, that's just a great yield. I mean, you take that with your factor there, Lanny, that gets you at 6.5% right there, but it's pretty much in line there with what you'd expect in that sector. Not the highest dividend growth, but a nice, strong, solid dividend yield that is safe with that payout ratio.
Get paid to see what Verizon's going to do with 5G, maybe fiber. Who knows what's going to happen with Verizon and what they have up their sleeves. Again, very undervalued just by looking at the sheer metrics. You have to love that they've continued to increase their dividend, unlike some other stocks we may know.
Exactly. So a quick summary here with Verizon, P ratio of 11, payout ratio of 49.3. Increase that dividend for 16 years with a dividend growth rate of just over 2% and a very strong yield of 4.48%. You want to take us home, Lanny? Who's this third company?
So if you haven't caught the most recent video, Bert was all about the big bank stocks. Obviously, we just listed off 10 big, large banks, including JP Morgan and Wells Fargo, increasing their dividend. But we're not talking about a big bank here. We're talking about a small community bank based in the Jersey area that helps services New York and Pennsylvania. That community bank, who's $13 billion in total assets, sounds like a lot, but it really isn't, is Provident Financial Services, ticker symbol PFS.
I cannot wait to start looking at the metrics here for a bank because we have loved banks recently, as you've highlighted. Those dividends are getting jacked in. It's our favorite sector. We love pouring into bank financial statements.
And for those that never followed me on Twitter or followed us on Twitter / the comments at the blog or even on YouTube, I did own People's United, PBCT, but upon the merger announcement with M&T, I actually sold out of PBCT and moved those funds into Provident Financial Services, only because I didn't want to own a large bank like M&T, and I really wanted to own a similar type of community bank stock as PBCT. But to get into the metrics of Provident Financial Services, they're currently trading at just under $23 per share at $22.89. Again, a stock price that really hasn't moved over the last few weeks, maybe month or two. Analysts are projecting, all four analysts are projecting expected earnings of $1.90. So that first dividend stock metric that we look at equates to a low price to earnings ratio of 12 times earnings.
Yeah, moving into their payout ratio. Annual dividend is 92 cents. Divide that by the earnings of 190, gives you a payout ratio, another perfect one, of 48.42%.
Yes. And, before we go into the dividend growth, I do want to speak about the price to book value that a lot of analysts and researchers, investors look at when it comes to banks. The book value back on Q1, which I'm sure it's larger come Q2, the book value, which is literally just the equity over shareholders, the common shares outstanding, was $21.17. So the price to book actually is very tight at just over 1 times. So typically something trading around 1 is very undervalued when it comes to the banking sector.
Yeah, no, that is right. It is funny how the banks have their own unique way of assessing valuation, but regardless, in this case with Provident, whether you're looking at price to earnings ratio or price to book, you are both seeing strong signs of undervaluation for each one of the two metrics.
So Bert, how about you take it home with this third dividend stock metric, the dividend growth?
All right, I think we can handle that. Their 5-year average dividend growth rate's right around 7%, so very solid here in the banking sector. Their dividend increase streak's a little different here. They had a little pause last year with the dividend increase, but we'll see what's going on with banks, where the dividend's going to fall as the banks now have more capital. They're allowed to put it to work after the Fed stress test. So we'll keep an eye on Provident, but it is worth noting they were increasing that dividend. They had a nice dividend increase streak prior to last year's freeze. So it's not as if this company has never increased its dividend before. They just took a pause during the pandemic, which you can argue is probably a prudent decision for shareholders.
And, that bonus metric, that dividend yield, similar to Pfizer and kind of similar to Verizon stock, PFS at current metrics yields over 4% at 4.02%.
Perfect. I mean, you weren't kidding, Lanny. When you take a step back and you look at all three of these companies, P ratios are about the same for all three of them. Pfizer is the lowest with 10.4, Verizon in the middle of 11, PFS just over 12. Payout ratios are all perfect. I mean, they're all in the 40%. There's nothing really to compare. They're all looking great. They each have their own unique history of increasing their dividend based on their situation. That's probably the biggest difference between them. Average dividend growth rates, Verizon, the only one that's below inflation at the moment. The other two are very similar. And then your dividend yields, all between 3.98% and 4.48% for Verizon.
Yep, so you only are working with a 50 basis point margin right there. Those were the three dividend stocks to buy right now. Again, I'll show the metrics here on the screen across the board so you can see all three at the same time. Currently, I've been in the market to buy all three. I don't know. What do you think, Bert?
I mean, I don't see why you wouldn't be in the market to buy all three. I'll pick up some Verizon here or there. That might be where I lean first on here. But yeah, there's no reason for me to say I'm excluding any one of them. All the metrics look great for all three. I have nothing more to say. Nice watch list, Annie. That's what I want to say.
You're like, I'm cutting my two kidneys out. I'm getting as much as I can.
Yeah, donate plasma.
Plasma on the weekends. Do what you got to do.
Yeah, just keep buying those income producing assets. That's the key right there.
Again, if you found this was very helpful or informational, let us know in the comments. Give us a thumbs up and don't forget to subscribe to the channel. Let us know if these three dividend stocks are on your stocks to buy list. This was Bert and Lanny from the Dividend Diplomats. Over and out.